G'day guys, welcome to the September Australian property market update, and I've got to say I'm actually really looking forward to this one.
It's been a little bit for me, and really looking forward to diving into some of the data. I haven't been keeping my finger on the pulse because I've been off for the last month looking after my little baby boy.
Yeah, congrats.
Dad life is amazing. So yeah, I'm really keen to just sort of see where things are at around the country.
Yeah, so I'm just coming off the back of not sleeping too much for the last month. So well done for rallying today, mate, and getting it going.
Yeah, if I mumble my words and bumble my words, then you guys know what that's from. But I am well caffeinated this morning, so let's go.
So the two big rocks before we get into all the data that I love and hopefully you guys love every month as well is sentiment and interest rates. So let's talk about interest rates because you were updating me about that on Monday.
One of the things that I love to follow on a daily basis is Market Briefs, which is like a blog from the United States, and they've done a survey recently from all the economists, all of the banks around the US, and about 33% of them believe that the cash rate's going to drop in September. So by the time this thing comes out, it is very likely that they could have dropped, if not maybe October, which is such great news because generally the world really follows whatever the US does.
The great Phil Anderson says there's nothing better for an election than to drop interest rates just before you go to the polls. So it makes sense with 200 years of history over there as well. On top of that, I've been reading the CBA reports and they are still forecasting somewhere between 0.5% and 1.5% drop in interest rates in Australia at some point in the next 18 months. Now, when that happens at the moment, it looks like the RBA has continued to sort of keep its cards close to its chest. But if that does begin to happen, what we should see is a very, very strong surge in sentiment, buyer demand, and that's already coming through now in things like pre-approvals, the setup of self-managed super funds, and a whole bunch of activity getting ready to go to market at the moment.
And what's great about the potential drop in interest rates is the correlation between interest rates declining and asset prices rising. You know, if you look back at any time in history where we've seen that cash rate drop, we generally see property prices, stock prices, commodity prices all begin to rise off the back of it.
The last thing I wanted to say before we kick in as well is sentiment we're noticing on the ground in our business is very, very positive. Many more people booking strategy sessions in, many people expecting to buy a property immediately or in the next 3 months, and many people doing work with their bank managers or brokers and getting those pre-approvals ready. So very exciting times ahead, but let's crack into it.
Now, apologies if everyone is getting bored with us continuing to say the same thing over and over again every month, which is that Brisbane, Perth and Adelaide continue to be the front runners here in Australia for the monthly and the annual capital growth rates. Over the last month, we've seen the capital growth rates of those three markets go up between 1% to 2%. But unfortunately, it wasn't good news for all markets around the country. We did see property prices drop in Melbourne and Hobart. And those are the two markets in Australia where we are seeing those vacancy rates push up, which we'll talk about in a second.
So when we look at the annual growth rates in the last 12 months, like Simon said, Brisbane, Perth and Adelaide are definitely the front runners with, I think, Brisbane and Adelaide doing 15%, Perth doing more than 20%. And Sydney, as Simon just said to me off camera, is nothing to be scoffed about either. It's done 6%, which as an investor on a $2 million property, we're talking about $120,000 gain, which is phenomenal in 1 year, which is money that you haven't had to go to work for, that's just sort of happened while you slept. So exciting things happening there. Melbourne and Hobart, again, are the two that are sitting flat or slightly negative, and Darwin up there is sort of in the abyss at the moment. It's caught in the Bermuda Triangle where demand and supply aren't really coming together at the moment, but that, including Townsville, will be one to watch in coming years.
The interesting thing when you dive a little bit further into the data to sort of compare the houses versus units, particularly down in Sydney, we are seeing those unit prices slightly outperform houses now, and I think this is due to the affordability issues. It's really hard to gain finance for the purchase of a house, but a lot of people can maybe go for a townhouse or a unit, which is generally what we see around this stage of the cycle as well, where those townhouses and apartments can become more valuable as investments.
So when we look at one of my favorite indicators now, which is vacancy rates, as always, it's still Brisbane, Perth and Adelaide that look great from a vacancy rate at the moment. What was interesting and what we were commenting off camera was Sydney's creeping up a little bit, so's Melbourne and Canberra at the moment, with Canberra just getting into that 2.2% mark, which, as Simon was saying off camera, like feels a bit scary, but in reality, that is still a chronically undersupplied market and still not balanced. So what we think's happened is since 2015 in Australia, There's been a whole lot of people moving here, expats from overseas during COVID, and internationals moving across for this incredible lifestyle. And because of all the red tape at the state government level across Australia, there just hasn't been enough product brought to market, which is resulting in chronic undersupplies in Adelaide, Brisbane, Perth, and many other markets around Australia at the moment. And that is what is obviously fueling the capital growth and the massive increases in rent that we've seen across Australia in the last few years. But that is something that is always like a seesaw. It's always going to tilt. What my expectations are, and you've heard this first, is that we're chronically unsupplied now. At some point in the next 10 years, we'll just accidentally oversupply Australia with certain types of products. You've heard about Melbourne, for example, and Sydney with too many units, or Brisbane or Perth at one stage with the same problems. This is what we do as humans. We undersupply and we oversupply, and then we hit equilibriums. But right now, you know, Brisbane, Perth, Adelaide are looking red hot.
Moving on to the auction clearance rates around the country, we don't have the data available for Hobart or Darwin, but every other capital city in Australia saw an auction clearance rate above 50%. Now, comparing that to last month, we've seen a huge spike in the increase in auction clearance rates, which is really no surprise from what we've seen on the ground up here in Brisbane and what we've seen coming out of trading economics, where the consumer confidence rates have gone up by 3 points over the last month. So people are feeling a hell of a lot better about purchasing properties, which means that they are more eager to purchase properties at auction, and we're seeing those clearance rates pick up a bit.
Now, one of the things that I personally like to follow each month, and that's why I bring this data to you, probably because I would want to receive it, is just in relation to who's borrowing the money. So at the moment, it's about 64% to mums and dads and about 36% to investors. One of the things that we saw this week, which was absolutely crazy, is last year there was about 7,000 self-managed super funds established in Australia, and this year there's been 27,000. It's the same with trust structures at the moment. Obviously, you can talk to your mortgage brokers or bank managers about them at the moment, but we're seeing many more trust structures being established at the moment. And like I've said a few times in this video already, many people working towards pre-approval. So what I would assume is that those rates will pretty much hold for the next year, but investors are definitely back in the market. And we're not talking about those early stage investors, the very wealthy people that are getting out there and trying to pick the eyes out of a market like COVID. We're talking about the middle of the market where average mums and dads like me and Simon that want to set up our lives in the future are coming in, and we're buying the likes of Brisbane, Townsville, Adelaide, Perth, and really trying to set ourselves and our families up with that passive income, those choices in the future that we're really after.
Now, coming to those last couple of data points that we like to hit in these monthly market updates is the listings, and where are these at the moment? Well, unfortunately, the total number of listings decreased over the last month by just 0.2%. So not a marginal decrease, but still we do need more stock. But fortunately, we're coming into spring selling season, so we should start to see those numbers pick up a little bit. What we're seeing on the ground at the moment is there is plenty of properties to look at if you know where to find them. Now, on the distress listing side of things, which is where people are forced to sell properties because they're maybe in financial hardship, those numbers actually decreased by 0.8% over the last month. Now, this is really good news. It means people aren't really feeling the pinch of the higher interest rates at this point in time, and they're able to hold on to these properties and see some more capital gains like we're seeing around the country. So that's really good news. Obviously, we thought those numbers were going to increase over time as people came off their low fixed rate mortgages, but obviously with some wage increases, some capital growth rates, and maybe people going out there to earn some additional income, it's actually keeping those numbers super low at the moment.
You know, to just comment on that for a second, I actually didn't think it would do shit. And I've been saying this for 2 years on camera. I said it was a news headline. I said that this mortgage rate cliff that everybody was supposed to fall off. People underestimate the difference between media scaring the shit out of all of us and getting them to buy advertising space versus the reality of what I will do and what you guys will do to keep a roof over your partner or your family's heads. And many people, myself included, have had to tighten the belt and, you know, like do things to protect our families' homes. But that is like what Aussies do. And so there's a big disconnect, I suppose, that we're seeing in the media at the market, where they're trying to continue on one hand, like scare us in relation to interest rates, lending, distressed properties, sentiment, this thing or that thing. And then on the other hand, the data is so positively heading in the other direction that they're selling this get rich quick, it's about to boom, you've missed out type vibe as well. But it's always about something that you've lost or something scary, as opposed to the reality of the market, which we've been saying for the last year now. Like when interest rates are stable, when vacancy rates are low, when 300,000 people are moving here per year, plus all of the students are back from overseas, when Australia is able to sell what's underneath the ground to overseas, when the tourists are coming back, when we can sell our intellectual property and services and all of the beautiful produce in the country to overseas, then things are generally steady. And as Phil Anderson has been saying, literally since the last GFC, there was really nothing to worry about through these years. And so all I'd say is like that study of history and hopefully information like this can help you make better decisions. Now, we're not talking about going out there and buying properties that are costing you an absolute fortune, where you're losing thousands of dollars a week to hold them and hoping that one day they go up in value. We're just talking about realizing and understanding that Australia is a monster market with whole lots of like 19 different capital cities and regional markets around Australia, with over 8,000 suburbs across them to choose from. And some of them are ridiculously undervalued right now, and some of them are massively overvalued, that the only way that I'd probably personally want to buy them is if someone was going to give me the cash. Like if someone was going to give me $3 million to go buy Bondi Beach in Sydney, I'd happily take it. But you know, I'm not going to go spend my own money on that particular market at the moment, when that's sort of done 8 to 10% a year in the last 10 years. And then there's these markets in Brisbane, Perth, Adelaide, Townsville that have only done 2 to sort of 5 or 6% over the same period of time, and look phenomenally good when you bring in long-term history. So ran over, mic drop, but in reality, like there's a big difference between what's really going on statistically and then what sells advertising space. And I think that's part of why we love doing this stuff, what I do, so that I can have a rant and Simon can just shake his head at me every month.
Now, let's actually be real. I think everyone's coming to learn to love your rants, bro, and getting your opinion about what's actually going on out there. But let's shift into the gold nugget of the month and some positive news as well. So one of the things that came out from Simon Priestley, who is an amazing analyst and really picks apart the eyes of the market and identifies some really undervalued locations. And, you know, we've actually been looking up in this market for over 12 months now, and can see it is performing really well at the moment, but is expected to continue to be one of Australia's top performing markets over the next 3 years, and that is Townsville. It's actually the 14th largest market in the country, and it's the 3rd largest regional market in Queensland, and there's a lot going on up there right now. But Simon believes that this market could see 50% capital growth over the next 3 years, which would make it one of Australia's top performing markets. So it's looking super undervalued up there at the moment, and all of those fundamentals look really strong when it comes to economic diversity, population growth, relative affordability, and incredible rental yields as well. So really pumped about Townsville at the moment. You know, at the end of the day, there's plenty of positive news out there at the moment for certain markets around the country, but it is not all considered equal. And there is definitely some places that you would really want to avoid. So take that information with a grain of salt. But as Ben said, just dive into the research, do your own due diligence, and make an educated decision for the long term to hopefully set you and your family up.
If you're thinking about buying an investment property in the next 3 to 6 months, then the team and I at Pumped on Property would love to offer you a one-on-one strategy session. To book the session, all you have to do is go to www.pumpedonproperty.com and click that free strategy session button. Now, in the session, we'll talk about exactly where you are right now, where you'd like to be longer term, and educate you deeply on the Australian property market. You can then take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each month. Either way, we look forward to continuing to help you build your property portfolio with confidence on your journey to financial freedom.